All right, here we go. So good afternoon, everyone. Welcome to equity-alerts.com. It is our midday Friday special with our guest Elena, the Pip Princess, is here for the next 30 or so minutes to share some of her amazing insight on the Forex and futures market. And Elena, I'm gonna let you take over. I do want to mention something real quick before she takes over. Elena does do personal coaching for currency traders. So if you have interest in that, chat with her later in the chat room in the webinar, and she will be happy to get some more information for you. But anyways, Elena, thank you for being here, and I'm going to sit quietly and listen to what you have to say.
Yeah, and thank you, Kipper, for saying that. Also, one more thing, if there are questions, you just interrupt me because I only see my screen. I do not see the chat right now for the purpose of having, I've also kind of maximized my screen so the charts seem better to everybody. But if there are questions, I will be happy to answer.
Okay, I may have to have Lindsay step in to do that because I've got everything on full screen so that I can so I can record full.
Lindsay would be good. Jim, whoever.
Okay.
I'm fine.
Okay.
So
thanks.
Anyway, and then one more thing. Yeah, the internet has been doing spooky things way ahead of Halloween today. So no panicking. If I fade out for a moment, I'll get right back in. Because my laptop lost its ability to have the internal Wi-Fi, so I'm all corded up, and the cord sometimes gets a little loose, so I have to play with it. But it's going to be okay, because it's going to just be for a second, and I'll be right back in, I promise. And then with that, I would like to first cater to everybody who is in the room, being mostly intraday traders, but always me preaching, understanding the longer-term price action, and having the analysis done there first. So then in the intraday on a much smaller time frame, you have more assurance that you are taking the trade in the right direction, that you have probability, for now at least, with the selling, right? And so on the charts right here, we have S&P right now that I always have, and also understanding the correlation. So I have the S&P always on my screen. This is the long-term view of the S&P, which is a weekly chart. Very basic. I look at the divergences, but I also look at the price action. So we made new higher highs, correct? You're marginally higher than this day. Okay. So we made new higher highs, all-time highs. That's understandable. We don't really need to know the numbers. We just look at the charts and we see what's going on. But your warning sign day was or week was this week, where there was a huge correction. Okay, and then we had a bounce. This is a moving average 50. We already discussed last week that basically it's not a Fibonacci number itself, but rather the needs of the reversal or inversion of the markets, because they're going to stretch up as much as they're going to stretch down if and when they close their lower. So we use it as dynamic support and resistance. Bounced out of the support, created a new low high, and I bet you anything that from here to here, if we measure, this is going to have been a Fibonacci number. Failed, hit it again and again. Finally, we were totally in the overbought territory. And again, you can use any oscillator of your choice, very basic indicators, RSI, CCI, in this case stochastic base 833. All you need to know, okay, so by using the keep it simple, silly, I don't want to use the other word because that's too harsh. So you are totally in the overbought territory for a while. Overbought doesn't mean sell until we start closing back down the 80, and that's going to follow the price. So our bearish divergence is working right now. But even when we close back below this price right here, which is basically 25.30, 25 and a half, 25.30, we're going to be very, very careful, and we're going to be shorting the rallies. So in my view, looking at the daily chart, because we had bounces after yesterday, in the previous day, and yesterday we were falling very, very hard. Now I'm going to change from the divergence to my other template that I put together. And so the only reason why it's looking, showing bullish swan, it's a harmonic indicator that forms by itself. I don't use all of it, so to speak, religiously. However, it's helping me to identify very, very fast swing lows, swing lows, swing lows. Why is it a bullish swan? Because so far on the daily time frame, there is a bounce. So there is a possibility of the reversal. That's why it's called a bullish. And these two triangles is called a swan formation, white swan. And I've always said, do not care what it's called, just look for the price action. So basically, if it weren't for Friday afternoon and the markets were ready to close out for all of the weekend, we could look for the retracement back up to about 2,800. Okay, it was a very important level before it broke down, and it's going to be an important level if the markets are going to retrieve and bounce back out to that level again for either intraday correction or short-term correction, because we're not done going down and correcting on the daily chart to continue to go lower. So basically it would look like this, and that's what we're going to be looking for. We're going to be looking right now. Pay attention at this. Today we basically have a doji, and the doji is where it's an indecision in the market, where pretty much the close and the open happen at the same price. We still have a couple hours to go. Wouldn't initiate anything major. But if I am going to take out basically 27 and 80, okay, I would be on the intraday higher probability buyer again to the previous support, now going to be resistance. So one of the scenarios to start looking at for Monday is going back up here, looking for failures, and then shorting it. So always look at the shorts being in the red, the bears being in the red, so we'll just do visually here justice for ourselves. So these are important levels that we're going to be looking at. And then, I would like to zoom out and look at where possibly after we return to the downside, and it's always provided this goes here and fails, okay, provided. And so we're going to look at this bigger picture, and then we're going to zero in on a smaller picture, and then based on what we have analyzed on that, we're going to work intraday, right? And we're going to understand the correlation, especially with the yen pairs, as far as using our S&P as a proxy. So, provided this scenario happens, the next target profit would be our double bottom at basically 26.90. Is that important level? Absolutely. Look at this support. Look at this support. Look at this support. This was a resistance before it broke out. Okay, so this is the level we're going to look at. Now, obviously we are going to have a bounce when we come down as sellers, as bears. And as said before, the only other indicator I have here is the moving average that kind of follows the cycles of the markets altogether. which is 365, 360, referring to the natural laws of physics, which markets always do respect. It's going to serve as your support. And I'm giving you a lot of secrets, guys. So I'm thankful for you, and I would like to hear thanks sometimes too. So anyway, yeah, and if we look at the historic previous highs and lows and the important levels above and below which the markets were oscillating, we definitely want to look at this up. So that's our S&P. I will not go. I just don't have enough time to go through the intraday right now on this particular instrument. However, if we analyze and understand the bigger picture of what's going on and do it like that, then on the intraday we are so much better off to understand what higher probability for us is, whether it's a selling a popper in your language or buying a dropper. Okay, so that's S&P. And with that, I'd like to move to the next instrument, which is WTI, and lately has been hugely correlating with the indices. Okay, so here on the daily, yes.
A couple questions. Kevin asked the 20-day moving average on the monthly. Is that the S&P, Kevin? He doesn't know if you follow, but a 20-day moving average on the S&P has been powerful for him to follow, resistance or
well, the 20-day moving average is an average that John Bollinger created and called it in its book 20 and the Bollinger Band's 20 MA, which is the medium. Again, dynamic support and resistance. It is very, very powerful. The markets either bounce out of it or break and close below, and then we're going to look for retracement and the hold and the close back below the 20 for trading it to the downside after the reversal. So this is the 20-day MA. Bollinger Bands, that's all it is.
Cool.
Yeah, and
okay,
it's very, very... Go ahead. What was his question? I would like to know.
Well, he just want to say, is it something that you follow? He finds it, Kevin finds it a very good, strong, powerful indicator.
Yeah, absolutely. And that's the 20-day Bollinger Band. And the bands are the consolidation followed by the expansion or breakout, meaning no trend choppy, followed by trend. No trend choppy, that's how markets move, right? And so when John Bollinger created his Bollinger Bands, the medium is the 20-day moving average, and the prices oscillate above and below it. And one of the reasons that it is very powerful is because what's right next to it is 21 Fibonacci. Because Fibonacci goes 21, 38, right? Right? 618 and 786 and so on and so on. So yes, it is very, very powerful. That's true. And I hope I answered that question.
Yep. That's it. Go ahead.
Okay, cool. So now we are with the WTI. Obviously, we can look at it at larger time frame and understand that basically 75 level and 75 were created a little bit more, again, a bearish divergence because we spiked out and took out the previous high on the weeklies. So I'm looking at it as a diverging market as well. So here is our highest swing high than the previous high. Okay, and we're obviously overbought. I don't even have to put an oscillating indicator on that because I know we're overbought. Boom, 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 boom. So we need to start unwinding overbought weeklies, and that will give us an opportunity if we understand the correlation with the indices, and that oil has been kind of following, and then we also understand a little bit of what Trump is saying, with the ethanol lately, and he steers, and also the production of the United States, and also more independence from the fossil fuels. There is no way that we have to be like flying high up with the oil. We just are much less dependent on that. And we also understand the 75 level being important before it broke down. And that's weakness. We also have a very strong move up, and this is basically could be a bullish consolidation because we have higher lows and the same highs. But this, again, just understanding geopolitical system and a little bit what's correlating monetarily to what we can make better decisions to what we're going to do. So we looked at that, and then we switch over to a smaller time frame. And what we are seeing right now, again, we have another doji on the day because volatility is not good for the liquidity. A lot of traders are running for the safer haven, but they don't. Right now, what was happening today in the markets, it's like almost they don't know what the safe haven is right now. So whoever can afford big hedge fund managers who hire MIT guys to create HFTs for them, it's almost like they turn on the robots. So now, with oil, we might be looking at either a break, planning for the next week, right? So we are on the daily charts, and we have this trend line taking into consideration this swing low, the higher swing low. So if you can connect two dots together and use it as a support, that's plain geometry. So if we break this down, we could go further. However, we could have a correction back up to basically 72.75, right? And then if we hold that, we can go lower. It's just the wave count. It's just how the markets, they never pretty much fall down. We wish that the trends were always present there, that if we fall forever. If we rise, we rise forever. But it doesn't work like that. But if we do analyze what is going on in the larger time frame, and look, 72.75 was hugely important on the way up as the oil was going up. It failed. Okay, it came up on the next attempt, it broke it. Now, if we respect this trend line and come back and hit it and start showing the bearish reversal signs, we could start resuming our sell. Okay, and that's a higher probability again. And I don't know if it's recording right now or not, but if anybody wants to take a print screen, because it's going to be easier, because I already analyzed. And that's why I keep preaching. Let's just look at the larger picture, and then on the intraday, we won't, in combination with the money management, being conservative, we won't bite our nails. Excuse me. Shh. She always feels like she has to protect me. I don't know. But anyway, so that's oil. Does anybody have any questions on WTI? Did everybody fall asleep? Hello? Hello?
moment, there's no question. Kevin, you got any WTI questions? You sort of do a lot of oil charting. Stepped away. Nope. It's all yours. Keep going.
Okay, so at this point, I could do one of two things. I could analyze the intraday for any instrument, or I can move forward with any other instruments on the daily, and then, because I don't have that much time, and so that's a concern of mine. I'd like to talk for hours about it, because I love it.
You want to talk about the yen pairs at all?
Excuse me?
Do you want to talk about the yen pairs, or?
Yeah, I think what would be helpful if we talked about the yen pairs, basically the USD yen for now, and then if we look at the bigger picture, and then this particular instrument, the USD JPY, I will also kind of go through a much smaller time frame for intraday to help intraday traders. What I do. Is that okay?
Yeah, perfect.
Okay. Give me just a couple minutes to get a little bit more water, and I'll be right back. I'll be right back in 2 minutes. Thanks.
No problem. Anybody have a specific FX pair they're interested in? If you've been following Elena lately, which I have been, I think Jim has too, she's had some great calls on the dollar yen short, the Canadian yen short. Kevin wants to know about the Aussie. Okay, I'll ask him. And then the Kiwi. Okay. So you want to look at the Aussie? Oh, that's been a long time. Downtrend. Oh, so what's that? And the Euro Aussie. Okay. If you go on a daily, Jim, of the Kiwi dollar or even the Aussie dollar, you can draw a trend line at the highs of those candles, and you pick up 4, 5, 6 of them perfectly. It's just, it's just been down, 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 down. So that's one thing I haven't looked at.
All right.
So, Elena, I'll just make it. You can make a note. Let's see. Kevin wants you, along with the yen pairs, and you can stay as long as you want. Don't get. You want to barge into my time? That's fine with me. And it depends on your schedule. So I'd like to have you look at the yen pairs, and then Kevin was asking about the Aussie dollar. Jim was asking about the Kiwi dollar and the Euro Aussie. So,
Okay.
whatever you get to. Oh, yeah.
Okay. The thing is, like I said, I'm going to try to do the whole overview of the yen pairs right now because it's important. Because there is a huge correlation between the bearish markets right now and the yen strengthening. So I think that could be very, very helpful for at least upcoming week. So I'd like to concentrate on that. And then if we have time, then I'll go through other instruments. I'll be happy to. The thing is, like I said, I constantly I have loose connection with my Ethernet cord. I have to basically hold with my right hand. It's so rednecky, you won't believe it. Even me being Russian and coming from a redneck little southern village, I feel rednecky because I have to hold Ethernet cord with my right hand. And I have a new PC that I was able to purchase that I have to reconnect because everything else burned after 11 years of being working for me fine. So lots of fires to put out, but we're gonna make the best of it. And if I don't, you know, if I don't respond to somebody's particular question, I apologize ahead of time, but I'll be always happy to, respond to it when I can. Okay. So anyway, what do we have here with the dollar yen? So I have my measurements from the last low to high, within which the price is currently working. So my next two levels, so that's my planning already for the next week. So the next two levels that I have measured up are between 1160 to 1140. Why? Because from this low to this high, and again, mind you, you guys can do it on any instrument, whether it's a Euro odd or Aussie or New Zealand, whatever it is, markets always move in the same fashion. So anyways, geez, like I said, this. Anyway, so we are currently working within this major low to this major high, and we broke down on UJ the 50 price level, which was important resistance, important support. We broke down, but our close was not really bearish, right? We didn't have a really bearish. Let me zoom in a little bit. We didn't have a bearish formation. This is basically close back above 50. So we could have anticipated a bounce back up to about 112 3/4. We could have anticipated it. However, the markets were still weak. So they were choppy, they were unpredictable, there were algorithms involved on the intraday. It was scary, kind of. I kept saying, be extremely conservative. If the markets were starting to fly and recovering from the previous day's losses, the yen would have weakened against the US dollar, and we could have at least come up to back to 112.75. So you have that analysis and you understand the correlation right now. But we didn't. So now, what are we going to be looking at? If we possibly, on Monday, open up back below 118, 111.87 and whatnot, that would be previous resistance. So if we gap down, then what level are we going to be attracted to? We're going to be attracted to the next 30 pips down, which is 618 of this low to this high. 30 pips doesn't seem like a lot, but it's if you do 30 pips day in and day out, you're going to be good to go with your own trading business if you just stay conservative and understand what is going on the larger time frame. And then the next level down is just about 18 pips lower because we have the previous spike high, resistance, support, resistance. So these levels between, in this example, between 58 and 42, I call it the sweet spot, whether it's on the way back up or on the way down, because right here the profits are going to be taken. And the markets could reverse and bounce out of it, or the markets could break and continue being attracted to the next level down, which is, in this case, basically 110 3/4. Is it important? Yes, it's very important. But we're going to look for formations like this on the candles, which is basically a bearish railroad. Huge up candle, bullish candle, followed by huge bearish candle. So we look for a sell, higher probability, huge reversal. Okay, we've done our analysis, we've done our homework on the daily time frame. Now we are going to be looking as intraday traders. I trade from the 15 as an intraday trader. The only time I switch over to 5 is when I trade non-farm payrolls and I wait out for the initial move, initial reaction, and after the first 5-minute candle is closed, I throw in my fibs and I see whether the move continues or the move reverses. And that is a topic for a totally different day. So I could talk about non-farm payrolls, but I don't want to be involved with anything too volatile that doesn't follow. So this is our analysis on the dollar yen. And if we looked at that and we know our important levels, so we can also have, I can go into 4 hour, just don't have time because 4 hour is very, very important time frame for me because I can make good pips on the 4 hour, a bit more than from the 15-minute, but my position sizing on the 4 hour is still small, and I most likely on the intraday 15-minute I cut load up if it goes in the direction of the traveling trend. So that's what I do. So this is my 15-minute template, and after a big fall on the dollar yen, you know, like I have all these levels marked here, projecting for the future, but I also look at my history. And once we started falling, I think it was even before that, because we made highs of above 114. I think it was 114 and 45 or something, and I think Lindsay started selling at 114.14 or so. Lindsay, you there?
Yes, I am.
Okay. So I think we started selling. We started selling somewhere at the top, right? We started selling.
I shorted 114.14.
Yeah, 114. See, I have a good memory. I know where you started.
Very good. And then I added at 113. 113. Looks like 33, give or take.
Okay, so we started shorting right here. I also started shorting somewhere around 114. This is basically when we started making lower highs and hitting the same lows. So that's your bearish triangle breaker. And we have been falling ever since. But again, as intraday traders, we have to understand that we're going to have pullbacks and supports. And if the pullback is significant, then we're going to either close our position totally, or if we caught the top, at least the remainder has to be running risk-free. So if we have this pullback occurring, okay, so this price action, we don't see what's going to happen to the right. But we have our S&P, after having analyzed it on the dailies, also sitting side by side with our dollar yen. Huge correlation, especially now. So now we hit the support and we're coming and creating, coming up and creating lower highs, and we're hitting kind of new higher lows and creating kind of new highs. However, right now at this price action, it's occurring within this swing high to this swing low. So we have to measure that. I mean, like, we don't know what's going to happen ahead of us. We're just watching this particular price action, and we have our S&P, or if you gauge it by DAX or whatever indices you used to gauge it with, right? And so at this time, when the pullback is occurring, you're working within this most recent high to this most recent low. And guess what happens? It starts failing, it hits 618, and it starts failing. We have a bearish candle reversal, completely bearish candle reversal. So we can start reshorting it because longer term EMA is showing us we are in the bearish trend. We're going to start shorting it again. If we are already short on the dailies, we want to start helping ourselves or adding to our positions. However, I would not load up unless, so I see my bearish reversal. At this point, I'm working within this low to this high. Okay, so I clean up my chart. I understand now where I started reversing. Again, don't see anything yet to my right. I have no idea what's going to happen. But at this point, I'm working from this low to this high. And I can literally start loading up once I start breaking back below this price, which is 786. And guess what? The HFTs were definitely involved here because it came down and whoever was selling it on the sell stop at 786, they scared them out. Okay? So on the choppy days like that, you have to be so precise on your entries that maybe, just maybe, even though you had a bearish close, number one, you understand what time of the day it is. Are you still in the liquid session to where it can bring you from this point to this point on the momentum based on the volume itself, or you just stay out and see your next candle is going to develop a bearish momentum based below the low of this candle, or you're just going to wait it out, sit it out, and just be out of it. You also can put the sell stop based on this swing low, and it did break. This is the time when we are going into an Asian session. The vertical white line here is indicative of the rollover, which is 5 p.m. New York. So your Tokyo opens, followed by the Australian Open and whatnot. So you can stay out. We had created a double top. If the markets were not in the red today, there was sustainable, nice pullback, we would have gone back up. Then we switch over and again put side by side our daily time frame, looking for a pullback a little bit higher, maybe having a sell limit sitting there to start reshorting again. But that's what's happened. So it is very tedious, but I prefer it that way rather than no way. So, especially in the scary times like that, I don't mind it.
Absolutely. Yeah. So I got 2 questions. First of all, one is mine. Can you go to the 1 hour chart on the yen? And I've go back to the what's that, October 10th. See the top of that red candle, and I drew a trend line that ticks up. If you draw a trend line down from the top of that candle down to those other candles, it sort of has a nice trend line, and I've sort of had that drawn, so since I'm in the trade, I sort of may look for a place to get out if it breaks. Yeah, go like to see the red candle on October 10th at the top there. Yeah, you've got the triangle. Oh, excuse me. I got on the 1 hour.
I'm on 1 hour.
Yeah, on October 10th. That's there. That candle there. So draw a trend line from that candle, and then pick up the top of the candle on October 12th. It almost picks up both of them. Yeah, and then continue it. And I'm using that for a place to get out if it breaks that trend line. That's just me.
To the upside, you mean?
Well, I'm sure now if it breaks, yeah, if it breaks to the upside, that's real
That's
good.
what I mean. Yeah, that's what I mean. That's what I mean. So then you're looking for something like that, the move to the upside and breaking. Yeah, and also, yeah, if and when, right? So, but we have to be prepared ahead of time. And
Yeah.
so we have a little bit more stable time frame analyzed already, and also the break above this trend line. We still, if we do for the retracement, what are we working with? We're working with the low and high, right? And so right here, when we come to this trend line, right here, we have a 50 fib right away. So guess what's going to happen here? If anybody is intraday long, they're going to be taking their profits right here at 112.18. Okay, if we break, come back, we break higher, come back. Oh, see, I even put it that way that it came up to 618. So here's what another possible scenario. We have the price break hit 618, which is 112 and 1/4. Huge level. I mean, look at this. How many times the market oscillated above the low and using it as resistance, using it as support.
Absolutely.
So 112.25 is a very, very important level for us. If we're intraday going long, we want our positions, short-term positions, to be covered for at least profit taking, if not for reversal back to the downside. And we'll plan from there. So we'll plan from there. Right?
So thank you. So Jim asked, what is the average time you're in most positions? I know you have some longer term trades going, but if you're doing day or swing trades, I mean, do you have like an average time, or do you just let the charts get you in and out?
Well, as far as I remember, Jim had asked me before what time frames I use in general, and I told him weeklies, dailies, 4 hour, 15 minute. And I only use 5 minute time frame on very, very, very important news if I choose to trade the news. And so therefore, if I'm in the position on the weekly time frame, like USD ruble, some of you guys might not be trading it, but I've been in the USD ruble for months, and I'm still looking for doubling up. Right now, at the 60 something, I'm looking for about 130 USD against the ruble. So small, tiny position size, the most conservative, right? I open as a position trader, but as the intraday trader, I buy dips and then I cover them up at resistance, thus adding to my overall equity. Does it make sense?
Right. Yeah, it does.
So that's how So I buy the dip, I put the target profit at where I project the next resistance will be, and it's a larger position than if I hold for weeks and months. It's a larger position, and some of the positions I hold just for the pure swap interest, and it depends on the broker. My broker gives me swap interest on certain currencies. Like if I hold gold as a buy, it gives me a negative swap. But if I hold gold as a sell, it gives me a positive swap. I accumulate interest on holding certain positions. And that's some of my positions, like Oanda, which is pretty well known, a very reputable broker out of Canada. They're all over the world right now. But they have some very, very, very lucrative overnight swaps for certain currency pairs. So that's why I'm saying, whoever you choose to trade with, don't be lazy. Choose everything out that your broker offers you and go for it. Like US dollar against Turkish lira. So some of the pairs you want to open after the rollover, after 5 p.m. open. Because if you open before it, the swap is going to be negative. But if you open after PM, your swap is going to be positive. So it's a little bit more involved. But yeah, I hold monthlies, I hold weeklies. I add to my positions on the intraday with a bit higher lot size, and then I close it within the intraday. And some of my positions, obviously, that have been opened on the 15-minute time frame, I hold them like today. GBP USD was breaking, so I was there only for a scalp. So it happened fast. It broke so fast just because of the general volatility.
Oh yeah, I see that. Wow.
Yeah, I took it, and I still have part of it. My target profit on the partial is 131.47. Next target level.
Almost there.
It's almost there. Yeah, that's it. Okay.
All right. Cool. Anybody else? Anybody else have a question for Elena? There was one. Jim, I have a question.
Did Jim have a question about particular currency pair?
Yeah, I was just trying to. Oh, here it is. Well, he was asking about two: the Kiwi dollar and the Euro Aussie. Let me take a look at the Kiwi dollar.
Let's do a very fast one.
Yeah.
I feel guilty. I feel guilty.
Don't feel guilty. Get back to stocks at 2 o'clock or something. I hope this is helpful to everybody. You get some really fantastic advice here.
Thank you. Okay, so we have a bullish formation starting to form on the Kiwi dollar on the weeklies. Also, it's a double bottom if you see from the previous bottom. So very important support, very important level. We didn't quite come back down there, but we did start a Dixie, which is dollar index weakening up some, which is fine. So very, very important level, 63.5. We're gonna come to it or not. We don't know yet. We are going to cross that bridge when we come to that river. So for now, the weekly.
Jim said he went long at 64.77. Just so you know. It's actually pretty good.
Sell or buy? Low levels. Yeah. You said it's pretty. Okay, so your daily formation is the bearish spinning head, or whatever you want to call it, the closest bearish. So you have this double top to take out, which is basically 65 1/4 to take out to add to your positions as a long trader. And then on the 4-hour, you have a retracement, but you also have this high lows, and if you have the trend line going, you might be in the process of just a retracement before you start returning to the upside. And the price action is happening within this, basically your 4-hour bullish railroad formation on the candles, and then you can use important levels to witness whether it's going to be just a retracement and or a reversal back to the downside. So he went long from this level, 64.75. It could come back down, hit it, and then if it holds and returns to the bullish momentum, then you could add and project to the upside again. Important, right? 64.75 is very, very important. So right now he's with 25 points in profit finishing the week, but you can either take it off the table or watch the price action coming back down to this level and then see what we have here, what happens here. I think we will have a pullback. I think Euro is going to have a pullback. I think British Pound is going to have a little bit stronger of the pullback. Therefore, after we took profit on the dailies on the Euro GBP, now I have longs going on the intraday on the Euro GBP. The recovery is going to be a bit higher. And NZD and the Aussie are going to follow what the Euro is doing. But watch your gold and understand the correlation. That's why I always have my S&P, okay, and right next to my gold, which we didn't even have a chance to go over because there is a huge inverse correlation. So I have my gold, and then I have my crude, always there, side by side, analyze long term, and then 15 minutes to enter the intraday. That's cool. Okay, thank you.
All right. Well, you've been great. Thank you very much. Everybody's saying thank you in the room here.
Oh, really? I appreciate
Yep.
everybody's
Jim
time.
says thank you.
Yes, thank you. Thank you. Thank
Great
you.
job. Loves it. So,
Thank you.
yeah, thank you very much, Elena. We do all